In this podcast, we will discuss what is finance, three financial statements, and circular function of finance. Finance is art and science of managing money. Manager must have an understanding of both art and science to create value for the shareholders. Art is the understanding of the qualitative and quantitative factors and foreseeing its impact on the future value of the company. The science is the theories and models and the tools and techniques used for formulating the financial strategy. Corporate finance involves managing corporate resources such as assets, liabilities, equity, and generating positive cash flows and creating value for the shareholders. The responsibility of the financial manager is to maximize the wealth of the firm. Managers maximize the shareholders' wealth by generating positive cash flows and increasing the company's stock price. Let's assume you bought a stock for $40 and after 1 year, stock price went up to $50. The shareholder wealth has increased by $10 per share. It is an excellent example of wealth maximization. The best way to make management decisions is to understand how the decisions impact the company's three financial statements. If you are in a business, you should make the three financial statements as your mental model. The mental models will allow you to see the impact of your decisions on the company's financial statements. Three financial statements are income statement, balance sheet, and statement of cash flows. The income statement shows the revenues, cost, expenses, and profit for a particular period, such as quarter 1, 2, 3, 4, or for the specific year. The balance sheet shows the assets, liabilities, and owner's equity at a particular point. If you are in a business or starting a business, it is essential to understand that there are 5 primary functions involved in business. The 5 functions are marketing, finance, operation, human resources, and technology. These functions can be divided into several sub-functions based on the size of the organization and the industry nature. The purpose of this podcast is to introduce you to the finance function. The circular function of finance is a step-by-step function for creating the wealth for the shareholders. The 5 steps in the circular function of finance are: number 1, raise money; number 2, invest money; number 3, generate profits; number 4, share money; number 5, reinvest money. Let's assume that you're interested in starting a small restaurant. You have done the homework and prepared the business plan to start the business. The first step in the circular function of finance is to raise money. Let's label this as raise money on the circle and assume that you have accumulated $500,000 from family and friends and your own money to start the business. After raising money, as a manager, you will focus on investing money. Let's label this function as invest money on the circular function of finance. The investment function involves leasing or buying a building, acquiring kitchen equipment, furniture, and other assets, and food supplies for the restaurant. Once the assets are placed in the business, you will shift your focus on profits by managing cost and expenses. Let's label this function as generating profit on the circular function of finance. Assume that you made $50,000 in profit. At this point, you decided to share $10,000 in dividends to shareholders as a token of appreciation and reinvested $40,000 in the restaurant. The $40,000 reinvested in the business is referred to as retained earnings on the company's balance sheet. Let's label this as reinvest the money on the circular function of finance. The startup restaurant was success, and people are always waiting in line during the lunch and dinner. One regular customer who is a university professor advises you that if there is no growth in business, the business will go bankrupt. Furthermore, he explained that the people standing in the line are opportunities for growth and expansion. You realized that growth opportunities and decided to expand the seating capacity of the restaurant from 60 to 80. To expand the capacity, you need $240,000. That includes kitchen, building, and furniture, and working capital, and other assets. You have $40,000 retained from the profits, and you can borrow $200,000 from bank or some other source. As a manager, after you raise money from outside, you will invest, generate profit, share a part of the profit among the shareholders, and reinvest rest of the profit. You will go through this circle again and again. The circular function of finance will stop only if the company goes bankrupt. The circular function of finance is the key to keeping the business out of bankruptcy. In summary, finance is art and science of managing money. Goal of the manager is to maximize the wealth of the shareholders. Managers should make mental models of 3 financial statements to understand the impact of the decisions on the 3 financial statements. The circular function of finance is a 5-step process that involves raising money, investing money, generating profit, sharing profits, and reinvesting money in the business. The 5-step process stops when company goes bankrupt. Managers have to increase revenue, manage costs, increase cash flows to maximize the wealth of the shareholder. Wealth maximization is determined by the change in stock price from year to year. Thanks for listening.